Hello, it's Adil Fazal here, market analyst for CFDs.com, bringing you a review of US markets. This is brought to you by CFDs.com, a specialist in spread betting and CFD brokerage. Be sure to visit their website and certainly to learn more. Alternatively, visit the educational site www.cfds.education as well. Okay, so let's try and decipher as to what's going to happen with regards to US markets. Now, before I start, this whole market hinges on one pattern. Okay, this is what I'm going to explain to you right now. It's about this H&S formation. As you can see, this is the H&S formation on the S&P 500. This is a 60-minute chart. We are below the neckline. We've broken down below this key diagonal trend line, and therefore this is indicating weakness. Okay, and given the fact that we respected the H&S neckline yesterday, use your Fibonacci retracement tool as well. So if I just take the fib high, you take it to the fib low, okay, and you can see here that we retrace back up to the 38 to well, certainly 40-50% resistance, and obviously flush lower. The market currently is trading at 2073, and I'll discuss exactly what's going to happen next. Now let's just quickly run through the move of the markets overnight. The Shanghai flat, the Hang Seng butchered. That's the best way of explaining it. Okay, and the Nikkei obviously positive overnight. So given the fact that the Nikkei was positive overnight is not exactly a overwhelming bearish argument on the S&P 500, given the interconnected nature of the two indices. Now you can see here on the Nikkei itself. Let me just bring this up for you. You can see that we are looking or targeting the gap level at 20,000 on the Nikkei. So again, one needs to certainly take that into consideration when trading the actual market itself. Okay, so that certainly is something that I'm going to be taking into consideration as to whether I'm bullish or bearish. Now the Shanghai itself, flat session overnight really. I mean, you have the 200 MA, you are still stuck at this fib 75%, and we shall see exactly how that trades. Now we have had weaker inflation data out of China overnight, so therefore it supports the QE argument. Obviously more stimulus, more rate cuts, etc. And certainly China has room to maneuver, and we've had several dovish comments and market supporting comments out from the president as well. If I just reiterate some of the comments that I've heard thus far in terms of supporting the markets: Chinese Premier Li to speed up infrastructure construction, cut financing costs. Chinese President Premier Li to create new monetary policy tools to lower firms' financing costs. Now that's not exactly bearish talk, so therefore you have to respect that. Okay. And that certainly needs to be observed in terms of market movements as well. Okay. Also, given the fact that the euro itself is still languishing at the lows at 1.0730, and that should certainly support European equities. Okay, now let's try and decipher this in terms of the actual news flow this morning. Really, the overtly bearish factor is obviously given the fact that European markets are weak. I've explained the reasons why we're weak, and that will I'd certainly encourage you to watch the European market video itself. Okay, now I'm just going to tackle the US markets perspective, given the fact that we have export prices, import prices, red book, and wholesale inventories. Other than that, no real market moving event in terms of US data. So a lot of the market will basically depend on the movements from Europe, and Europe obviously is bearish, and we already have factored in a lot of that bearish movements, given the fact that if I go back to the S&P 500, if I go to the 10-minute chart, the S&P currently is trading at 2073, and the pivot low on the market was 2068. So we've certainly factored in a lot of the weakness in the European markets to a large extent. Also, given the fact that the Nasdaq is now down by 20 odd points, again that has factored in that bearish movement. Now, bear in mind though, the Nikkei was actually positive overnight. The Shanghai was actually flat. Okay, so that's something that we have to take into account and consideration as well when attempting to forecast these markets. Now we have the copper price, oil price, and gold price all coming into support, and one of the biggest arguments for a potential thrust higher is the gold trust. As you can see here, potential support. Consumer staples, again potential support. If I bring up the home builders as well, again potential support. If I bring up the retail, again potential support. If I bring up the energy sector, again you have had a push lower, but again we are looking at potential support. Okay. So if I bring up the actual financials as well, again we gap filled and certainly remains in a bullish potential setup. Okay, we also have the industrials, bottoming tail. We have the consumer discretionary, again retesting previous breakout, so again support, and we have the metals and miners, again potential support. So the argument for an overtly bearish S&P, it certainly is weak, and that's one of the reasons why I was looking at potential movement on the upside yesterday. Okay. let's see if we can decipher the market itself. So again, S&P 500 going to the daily chart. Daily chart, certainly you're looking at a potential help or potential crossover of the 20 MA through the 200 MA, which is generally considered bullish. You have the 200 MA at 2063. In terms of the market itself, you have previous resistance equal support at 2074, so that certainly needs to be respected as well. If we go to the 60-minute chart, again, you're looking at potential support at 2062, 2058, and then obviously gap fill at 2052. And whether or not we can close that gap, it's certainly a good question. Okay, certainly is a good question. And all eyes on the S&P 500 in terms of the HNS formation. If I cross-verify that with the Russell, you can see that we did put in a daily chart, did put in a potential bearish engulfing candle. 60-minute chart is actually into support. Okay, so whether or not we play out this HNS formation is a different equation or a different story, but we are into horizontal support on the Russell itself. We haven't had a major sell-off in the Nikkei overnight, nor do we have we had a major sell-off in the Shanghai. So again, those two arguments are certainly bullish. Market vectors, this is basically semiconductors, so I'll come on to this in a second. The Wilshire, again, you are holding 200 MA and obviously previous resistance equals support. Go to a 60-minute chart and look at the actual index itself. You are looking at support down here and down here, which is around the 21,250 level, and you have obviously triggered off this HNS formation, so that's certainly something that we need to take into consideration. Okay, now in terms of the VIX itself, you are holding support on the VIX on the daily chart. The 60-minute chart, you do have potential resistance now on the VIX, given the fact that obviously we've thrusted higher as well. You are looking at resistance around the 13 level, around the 13.5, 13.6, the 200 MA on the actual VIX itself. Okay, so certainly take that into consideration too. Now the actual Dow Transport still a thrust higher towards the close, so certainly bullish. Certainly a bullish move, and given the fact that we did put in a bottoming tail as well, again very bullish given the fact that everything else was certainly weak yesterday. And the Dow Jones themselves, although you do have a HNS formation on the 60-minute chart, the daily chart obviously has broken out as well, so again certainly need to be mindful of that. Again, we did put in a base at 17,680, so that certainly needs to be respected, and we're currently trading around that 17,680 zone now, so therefore again a bullish bias and a bullish scenario with regards to equities. In terms of the actual Nasdaq itself now, let's just bring up a chart of the Nasdaq. Okay, here we go. So yes, we have broken down below that trend line, so again that certainly needs to be respected. But we did actually put in a nice bullish pattern, or certainly a good thrust higher. Now we've pushed higher where previous resistance equals support, so certainly one needs to be mindful of that, and one needs to be wary of that. And you do obviously have this HNS formation, so again one needs to respect that too. So if I just attempt to draw this in for you, you have this left shoulder here, you have the head obviously here, you have the right shoulder here, and obviously we're thrusting lower. Now you have the head there. Let's just draw this in, and then you have, bear with me, so we are looking at potential head. And the HNS target, I'll just draw and project here for you as well. So the pivot high here was, you're looking at 4740, taking away the neckline, which is 4670. So you're looking at a 70-point drop on the downside. Okay, so given the fact that you are looking at a 4600 target, okay, so again we need to be mindful of that. And remember, there is a gap fill level at 4500 as well. So 4600 or 4610 is horizontal support here, and horizontal support here. So again, they're all things that we are going to take into consideration as opposed to the bearish argument in the market itself. But given the fact that the Nikkei is positive overnight, it's very hard to envisage that. And given the fact that the Shanghai is flat, there's no real overt argument for a thrust lower. This is the situation that I'm dealt with at present in terms of fundamentals. Okay, so again, don't fall in love with the downside. That's probably the best explanation. Okay, now the market vectors, semiconductors themselves, again, it was an inside bar yesterday, so no real overt bearish price action. And again, we have failed to trigger off this H&S formation. And given the fact that if you take the pivot lows, connect them together, and again the semiconductor certainly held a low. So again, it's not overtly bearish on the Nasdaq. So again, I just need to be very cautious with regards to any downside movements. That's my interpretation of events thus far. Although you do have obviously an unfilled gap below, but no real overt bearish price action. Again, biotechs yesterday put in a green candle. So if the Nasdaq was that bearish, then why would they do that? So again, don't get married to this bearish argument. Just be open-minded. Again, we do have this H&S formation, so I certainly needs to remain open to that, and certainly that is a possibility. But given the fact that yesterday's price action did not see any real weakness in the biotechs, again, it just gets me cautious. Gets me very, very cautious, and just need to remain open to the upside, given the fact that we've had this thrust higher based on QE, and the QE trade certainly is very strong at present. So just need to remain open to that as well. So again, is the S&P going to flush on the H&S formation to the downside? My analysis states no. Okay, my analysis states no. Now we do need another catalyst, so bear in mind if there's any other overt catalyst that's overtly bearish, so whether it's some socio-economic concern or geopolitical concern, that's what we need to send a jolt in this market and trigger off a risk-off collapse. And yes, the market is vulnerable to that, and you need to remain open-minded. If we take out that 2083, 2084 neckline, then you are looking at a powerful short squeeze right back up to the the gap fill level on the 10-minute chart. If I just show you this as well, you have a gap fill level here. Bear with me. You have a gap fill level is right up here, and that gap fill level is currently a 2099. So don't be surprised at 2099. So my interpretation of events is that we've already thrusted low at 2073, and then off we go to the races up to 2088, possibly 2083 and 2085. So especially given the fact that commodities are into support. So these are things that you certainly need to take into consideration when trading the S&P 500 today. Just, you can't fall in love with the downside. That's probably the only explanation I can give at present. And just remain open-minded, okay? Now, my biggest argument for a potential rally or a thrust right back up again is commodities. And that's the reason why I'm holding steadfast to my potential bearish argument, okay? Sorry, bullish argument at this juncture. I think all the bearish news has certainly been priced in, and we shall see how the markets react. Okay, I think that's a summation of US markets. Be sure to visit cfds.com for your trading needs, and I wish you the best in your trading day today. Goodbye.